Hello Board, we appreciate the opportunity to present our analysis on the potential market entry into Vietnam. We will present a structured and detailed analysis of Vietnam and its business environment, and which risks ANZ needs to consider. By the end, we'll provide recommendations to ensure a successful and smooth entry into the Vietnamese market.
Let's take a closer look at Vietnam's economic landscape and analysis. Vietnam offers unique business opportunities as one of Southeast Asia's fastest-growing economies. With 6.1% GDP growth projected for 2024, Vietnam is a top investment destination. Vietnam's evolving social and cultural landscape offers a promising future for businesses, its rapidly urbanizing population, and vibrant, dynamic community. A key indicator of its bright economic future is the rapid growth of its middle class, expected to double from 13% in 2023 to 26% by 2026. This signals more educated workers, making Vietnam attractive for companies. As the middle class grows, financial institutions see more opportunities, with rising demand for diverse banking services and products. Legally and regulatorily, Vietnam is making significant progress towards a more business-friendly environment for both investors and entrepreneurs. Key infrastructure investments and tax reforms have made it easier for foreign companies to do business in Vietnam. Tax procedure complexity dropped from 27% to 16%. Reflecting efforts to attract international businesses. State-owned enterprises dominate sectors, challenging private and foreign companies. Bureaucratic inefficiencies and inconsistent regulations complicate operations and slow investment. What about the political environment? Vietnam's single-party system, led by the Communist Party, offers stability. But this centralized structure can bring challenges, with risks of sudden regulatory changes, disrupting long-term planning. Corruption remains a problem in Vietnam. Businesses frequently encounter bribery and political interference. Vietnam scored 41 on Transparency International's 2023 Corruption Perceptions Index, rating 180 countries from 0, highly corrupt to 100. This reflects ongoing challenges with corruption.
Now that we've explored the business environment, it's important to uncover the business risks of operating in a foreign country. Let's explore how these risks unfold and their potential impact on ANZ's strategy in Vietnam. The first risk ANZ might face in Vietnam is political risk, including corruption. Vietnam's single-party system does offer political stability, but it lacks strong checks and balances. This means there are limited ways to oversee or challenge government decisions. This lack of oversight can lead to sudden changes in banking regulations or foreign ownership laws. For ANZ, these changes can disrupt long-term plans, create uncertainty, and make it harder to execute their business strategies effectively. Corruption in Vietnam impacts businesses, from daily tasks to major deals. Anti-corruption efforts have slowed public services, leading to longer approval times for investments. This creates challenges for foreign companies, affecting their plans and operations. For ANZ, who follows strict anti-corruption rules, refuses to pay bribes, can lead to more delays, higher costs, and slower progress.
While political risks and corruption are significant challenges for ANZ, another important risk in the cultural differences that shape the business practices. Business transactions in Vietnam are heavily relationship-based, and they establish personal connections before engaging in business. This culture focuses on developing personal networks, or guanxi, meaning that gaining trust involves more than offering competitive products and services. In contrast within Australia, where transactions often are more straightforward and deal-based. Then, how does the slower, relationship-driven nature of business in Vietnam put foreign companies like ANZ at a competitive disadvantage? State-owned enterprises have already deep, well-established networks. For ANZ, quickly developing these connections can be challenging, putting it at risk of missing out on deals or partnerships.
Vietnamese negotiation and decision-making are often indirect and hierarchical, which can be a challenge for a company made for direct and efficient processes.
This can slow down deals, delay market entry, and hinder ANZ's ability to respond quickly to market changes.
The indirect communication style also risks misunderstandings, as issues may go unaddressed, leading to delays or deals falling apart, wasting time and resources.
With these risks in mind, we have to recognize that foreign companies often face broader challenges when operating in new markets.
The liability of foreignness refers to the challenges a foreign company faces when entering a new market, often resulting in additional costs and a competitive disadvantage compared to local firms. Our study unveiled several challenges related to the liability of foreignness for ANZ's planned market entry into Vietnam. Navigating local regulations can be difficult. Foreign firms often face more bureaucratic issues or delays compared to domestic companies, which may have a better understanding of the regulatory landscape. ANZ may struggle with partnerships, as local firms prefer trusted, familiar relations. Lack of local ties can slow decisions, restrict access, and raise costs for ANZ as it spends more time building relationships and market knowledge. The cross-cultural risks in Vietnam highlighted a significant aspect of the liability of foreignness that ANZ confronts. Due to the Vietnamese emphasis on personal relationships and indirect negotiation styles, ANZ as a foreign entity may struggle to connect effectively with local customers. This cultural disconnection can prolong negotiation processes and makes establishing a customer base more challenging and costly. These challenges underscore the broader disadvantages of the liability of foreignness by potentially inflating operational costs and complicating market entry strategies. Understanding and addressing these cultural differences is crucial for minimizing the impact of the liability of foreignness and facilitating a smoother entry into the Vietnamese market.
After discussing the challenges of liability of foreignness, we'll now focus on how ANZ can overcome these issues. This section will offer actionable recommendations to help ANZ manage the identified risks. ANZ should hire local experts who understand Vietnamese business practices and regulations well. These experts will help navigate local rules and customs. Also, staff should receive training on Vietnamese etiquette, negotiation, and the importance of guanxi. Investing in local expertise and cultural understanding will help ANZ avoid mistakes, reduce delays, and tackle the challenges of operating as a foreign country. ANZ should prioritize relationship building as a core part of its market entry strategy in Vietnam. The management should commit to frequent visits, focusing on building trust with local leaders, government officials, and decision-makers within state-owned enterprises. Identifying decision-makers early and building rapport is essential, as decisions often come from the top. Due to cultural differences, ANZ will need to invest considerable resources in adapting its approach. Although this will be time-consuming and increase operational costs, these efforts are crucial for mitigating the challenge of foreignness and achieving a successful market entry. But what about the political risks and the ongoing corruption?
The political risk and corruption challenges in Vietnam are what we call a wicked problem. This means they are very complex and constantly changing, with no clear solution. These issues are deeply connected to the country's political and regulatory systems. Instead of looking for a single answer, ANZ should take a comprehensive approach to manage these risks effectively. ANZ should establish a dedicated team to monitor Vietnam's regulatory environment closely. This could involve partnering with local legal advisors that could help identify potential risks and adjust strategies accordingly. However, Vietnam's political landscape can be unpredictable. ANZ may not always foresee sudden regulatory shifts, especially when political decisions are made without clear communication. ANZ should also leverage its technology to ensure transparency in financial transactions and decision-making processes. Implement digital reporting systems to track and document all interactions with officials and business partners, reducing the risk of unethical practices. Lastly, forming joint ventures with local firms is a strategy to manage risks. Partnering with locals gives ANZ access to their market knowledge, regulatory insights, which helps in navigating challenges more effectively. This can lead to quicker market entry and lower compliance risks. However, it might also reduce ANZ's control over decisions and expose it to risks from local partners and business practices.
How do our recommendations align with the internationalization theory? We believe the ALI model is crucial for guiding ANZ's move into Vietnam. It evaluates key factors such as ANZ's competitive strengths, the Vietnamese market's attractiveness, and the importance of operational control.
The ownership advantage in the OLI model emphasizes ANZ's unique assets like proprietary knowledge and resources. Investing in local experts and training helps ANZ leverage these advantages to align with Vietnam's regulations and business environment. This strategic approach enhances market responsiveness and minimizes risks. For location advantages, ANZ integrates global practices with local knowledge via strategic joint ventures. Partnering with local firms provides market insights and cultural understanding, crucial for navigating Vietnam's complexities. Internalization in the OLI model is essential for ANZ to manage operational efficiency and risk in Vietnam. By maintaining control over regulatory compliance while leveraging local partnerships, ANZ balances oversight with local expertise.
Vietnam is a promising market for ANZ due to its fast-growing economy and expanding middle class. However, challenges like political risks, corruption, and cultural differences need careful management. To capitalize on these opportunities, ANZ should engage local experts, monitor regulatory changes, build strong relationships and partnerships. By addressing these risks proactively, ANZ can navigate and strengthen its position for long-term success in the market.